with that, Jim.
Okay, am I on? Okay, good, thanks. So I know a lot of you in the room, thanks. Thanks, Tim. You did a nice job of the introduction, kind of stole the first slide here. But I think from anybody from an entrepreneurial perspective, you find that there's a big push to go on to Gust, go on to Proseeder, in order to do that, in order for people to look at your technology. So I'm going to be talking a little bit about it, mainly from an entrepreneurial perspective, but also by looking at the things coming at it from an angel perspective. Got to make a little pitch, always be selling. At the fall pitch competition, I pitched AQ Biomed. We've got a booth out here. We have made it through the entire Rockies gauntlet, so to say. We have a term sheet with RBC, and now we're out for syndication using both Gust and Proseeder. And I've got a booth out there to tell you more about it, but we're trying to drive this home and get it closed in the next week or two. And I'll ask Tina and Kate to give their own introductions.
Yeah. Hi, everybody. Thanks for having me. My name is Tina Glickman, and I've been at Gust coming up now on a year. I started at Gust really working with our investor groups and understanding the full breadth of the platform, and I now manage our federation level partnerships and working to launch GEM, which you may not have heard of, which is Gust Equity Management. And so I will continue to build out partnerships with VCs, angel groups, law firms, CX groups, etc. For a bit of background, before Gust, I worked in New York City, building out corporate art collections, then got my MBA at the Dartmouth School of Business, found my way into private banking at Credit Suisse for a couple of years, where I was building a business mostly comprised of entrepreneurs who are at a much later stage in their game than many of the entrepreneurs that I work with now at Gust. And then I was happy to continue working with entrepreneurs, but in a very different way, and that's how I fell into this role at Gust.
My name is Kate. I manage the venture fund at Galvanize. We actually have a venture fund. I think that's sort of an unknown entity, but we've been very active. We started in February 2014. We now currently have 52 investments in the portfolio across the country. About 29% reside in New York, 27% San Francisco, 25% in the greater Colorado area, which is a really strong figure considering we're looking at everything. And then distributed across smaller secondary markets thereafter. We do seed, pre-seed, all the way through A, so we do reserve the follow-ons, and we invest inside and outside of the Galvanize community. We have over 600 startups in our campuses. We have 8 campuses. We launched Austin today, so at South by. So that's exciting, and Phoenix is next. And before Galvanize, I started in March of 2014. I've been with the company for 2 years. We're now 254 employees. I manage Lear Ventures in New York. They're Hippo Ventures now. I started that with Ken and Ben Lear. They're probably up to 250 investments, seed investments in the New York greater area, all focused on seed. Before that, Ken worked with Kenny Lear at the Huffington Post. Early employee there, and then prior to that, I was an executive assistant to Martha Stewart, so I have a diverse background.
Great, thanks. So let's talk a little bit about the evolution of angel investment. I think if you started angel investing a few years ago, before we had all the apps and the platforms out there, what happened is an individual company would have to reach out to individual investors. And so it was a lot of work. These investors may or may not know each other, but it's typically ranged out more really what you'd call a friends and family type angel investment. And then comes our oldest angel investing group, the Rockies Venture Club, which with Peter and Dave and the rest of the crew has got organized to form angel groups where they're putting some structure and some organization and bringing angels together and using the group wisdom to help make decisions. My background tends to be in medical devices, but others might be in finance or in web, apps, banking. And with that kind of group mentality, hopefully the angel groups are better able to make decisions and then bring that so that the company can work with one group, but yet the angel investors can have a correlation of the minds, or group mentality, and make better decisions. And then we start coming into the online platforms. And so now you've got the angel groups getting a bunch of angels together and the company, but as I found out recently, sometimes in order to talk to an angel group, you have to be on Gust or Proseeder or something so that they will even take a look at you. But this Gust also becomes a platform for going out for syndication, which is part of the themes of this conversation. So then finally, I've got to see if I can read this slide. When you've got a company, and one of the things you do is most angel groups cannot provide all the funding that they need for an individual company. So in the case of the Rocky Venture Club, their goal is to go out for syndication and to lead the syndication because of all the hard work that they've done. And then that would go out to something like AngelList. And you have the potential to see a lot of angels have the potential to see your company. And then finally, hopefully, or this got deformatted, but the angel would be able to go out and, I'm going to be able to read this one. This is the same slide. Yeah, sorry. The company would be able to go out to their main angel group. This angel group would be able to syndicate with other angel groups, but through Proseeder, AngelList, or something like that, would be able to reach other angels and also potentially the venture capital community, because they're all looking at this. So we've seen an evolution, and I think we're kind of in the midst of this evolution as we go on. So kind of looking at how things are going and how they're migrating, I'll ask Tina and then Kate to describe a little bit about, really fill us in on Gust, and then to fill us in on Proseeder, AngelList, where you're most familiar with.
Yeah, so I hope that most of you in the room are familiar with Gust, but you're also probably familiar with it from the perspective of a deal flow management platform. And that's exactly what Gust was built to do in 2004 when we were called AngelSoft. As Gust has continued to build out its ecosystem, in 2016 I think you're looking at a very different company. And the best way to kind of explain all of what we do now, I think, is to use a partnership that we are currently in the process of inking with a major accelerator group and venture fund. And I think it really helps explain the infrastructure that we've been able to build. So if you take it from the first step, it would be this group bringing in thousands of applicants through Fundacity, which is one of our recent acquisitions, which allows you to manage the application flow through an accelerator. From that point, once they've whittled down to their cohort, they're able to, the founders who are part of that cohort are able to use our prepare package. So what does that mean? That means they can incorporate on Gust now. They're able to have help building out these slide decks. All of these little things that really can help an entrepreneur become investor ready. From that point then as well, once they've graduated, they are on Gust, so they can access the 900 investor organizations that we do have on the platform for funding. And then also the Accelerator Venture Fund itself can manage the portfolio companies on Gust for the remainder of these companies' life cycles. And also manage the cap table, have increased transparency into the cap table, have the 409A valuations done, and then also bring in their 8 corporate sponsors to also have access to these deal rooms so they can see the continued evolution of these companies as well. Now, as far as syndication on the Gust platform is concerned, our angel groups have always wanted to co-invest with people that they consider to be trusted partners. And through our deal rooms, your groups can really easily collaborate on deals with other organizations by simply clicking one button. It's co-invest. Most of the groups on the platform have the ability or have already set their preferences so that they can accept these collaborations with other groups. And once you invite them in, they can access the deal. Or what does that mean? They can see more detailed information about the team. They can see past funding rounds, current funding rounds, financials, anything that you would typically see in an executive summary. And then they can share discussions about that particular deal. And they can also see aggregate interest levels for those other groups. Additionally, if the initiator of this co-investment would like to invite just one member or one guest in who is not actually a member of the organization, you can do that easily from the deal list as well. Maybe there's somebody you know that has, more value that they can add to this deal, whether they're an investor or not. All you have to do is add a participant to that deal. They can then share all the information in the deal room with you as well.
I had no idea that you guys were that robust. That's awesome. So I work for Galvanize, but we use AngelList, both to source. We recommend our companies raise money on AngelList. So I can speak from it as a user, but also, I see both sides of it. And I would say that when I was at Lear Hippo Ventures, we did not. I think that's probably changed now because the landscape has changed. And just to sort of take you back, AngelList started in 2010 with probably not the greatest reputation. This was around the same time that WeFunder started, Circle Up, and I say not the greatest reputation from a venture standpoint, right? We were dealing with a change in the SEC law for accredited investors. It was opening up a different market, and a lot of VCs, I remember that conversation going around in New York being like, this is bullshit, it's never going to be used, this is a total, relationship business, and we're not going to syndicate things online. That just doesn't happen. Obviously, this has changed. You can't not have some sort of exposure online. I just think it's the one too many. It's proving to work in different ways, and I think from both a VC perspective and an angel perspective, it gives you diversification. If you're based in Colorado, you can see things across the country on Gust or on AngelList or on Proseeder. So I like the idea. If I've been an active, I use all of these tools for research and definitely to deploy capital. So it may not be the exclusive way that a lot of angels function, but it's certainly an addition to option. So back when AngelList first started, they got kind of roped up into the crowdfunding conversation that really happened with Kickstarter and Indiegogo around the same time, 2008, 2009. And it was supposed to provide accredited investors with a marketplace. And that still exists today, but AngelList is definitely moving away from that strategy. Before you could go on to AngelList, just shop around, look at different sectors. They always had syndicate leads, but they're moving to about 70% of deals are private behind closed doors. So I would say if you're interested and curious about AngelList, definitely check it out now or sooner than later before they start to go very private and you won't have as much visibility into what's really happening. And I'd say a lot of that is due to they've had a ton of traction. They did 390 deals last year, which is quite a lot for them. And they have over, how many angels on their platform? Oh, over 3,000, which is strong. It's only getting stronger. And there's a TechCrunch article that came out in October that talks about the recent funding that they received from a Chinese entity. This is a long name, China Science and Merchants Investment Management Group. They have over 12 billion under management, so they put in 400 million into AngelList and the CSC Upstart Fund. So that's what's made this really interesting in the last year, is that AngelList is now going to be able to fund deals and support angels, which has never been done before on their platform. They're just rolling that out now, it's functioning. So if you go on the platform today, you'll see a lot of syndicate options. You can peruse the syndicates like Jason Calcanis. Who else is very popular? I don't know, the Winklevoss twins are on there. There's a whole bunch of other, syndicates. But shop around and look and see who has deal flow that you appreciate, that you like. There's a way in which, and so what's going forward is that the only way to participate as an individual angel is to either back a syndication, and oftentimes it's like a 1K minimum, 2K minimum, and that's devised over, okay, so if the angel is putting in 50,000, what is your allocation then per deal? With syndicate leads, in that formation, you have the option, if you're a part of that syndication, to cancel your investment 5 days prior to it happening. So you don't have to follow every single deal that they're giving you, which I think is a nice option. You're not sort of taken on this ride if you don't want to be. So it's a great information source in that regard. And then, you know, what's interesting now with our 400K fund is that all of you in this room, say you find a VC quality deal, and I say that in quotations because that's their terminology, and so it may be a deal here today, and you say, you know, I would like to lead this deal. And the company, and I understand the founder, I've known them for a long time, I've actually made a ton of introductions, and I've put in my own money. I'd like to put in a little bit more on their proper seed round, and I think AngelList would be a great place to do that lead syndication, but I'm not part of a syndicate, and I don't necessarily want to run my own syndicate, I just want to run this one deal. How do I do that? So you only want to put maybe 25K in or 50K in, but you could have gotten a 250K allocation as a more formal lead position. AngelList will allow you to do that on their platform, and they will back the remainder of the 250K for you, which is like shocking to me. I found this out over the weekend, I was like, shit. You will enjoy 20% carry on the cap table because of that. And you can only, you know, you put in the minimum amount that you can. It depends on the deal, you know, if they're raising $1 million and how that math works out. But AngelList will take 5% of that carry, you'll still enjoy 15% after that. And then you can bring your syndication in. So I think that this is really interesting in terms of giving angels a little more gunpowder to punch above your weight class. And where it gets really interesting is the follow-on structure. Say a year from now, that same company that you backed is going for their A round, and you want to keep your pro rata. AngelList again, so as long as you either meet your minimum, which would be the same amount that you put in originally, or 5%, AngelList can back up to 95% of your pro rata. Again, you'll still enjoy that 20% carry, divided 5% for them, and that is largely funded by the CSC Upstart fund that they have just raised. So that's new information. That's, as of they announced that in October, you guys can go read the TechCrunch article for more data, but I think that's their newest role, which is really interesting from an angel perspective.
Wow, that is interesting. So I want to divide the room up a little bit, and I want to know, because I'm more familiar with Gust, I want to know if you're an entrepreneur and you've used Gust, raise your hand. Okay, so a lot of people in here. Okay, if you're an entrepreneur in here and you haven't used Gust, raise your hand. Okay, and let's do this for the accredited investors. So if you're an investor, raise your hand if you've used Gust. Okay, now raise your hand if you haven't used Gust. Okay, so it's very interesting. Now everybody can't see what we saw, but basically for the entrepreneurs, half of you have used Gust and half of you haven't. For the investors, probably 3/4 have used Gust and 1/4 haven't. So what does that mean for the entrepreneur? You better start using Gust. Okay, let's ask the same question. If you're a entrepreneur, have you been on to AngelList? Raise your hand. Okay, how about you haven't been on AngelList? Okay, more have not been on AngelList than maybe 60-40. Okay, how about as an investor, who's been on AngelList? Okay, who hasn't been on AngelList? Okay, so again, maybe 2/3 have been on AngelList and 1/3 hasn't. Okay, so I've got a question for you, for maybe both of you, but maybe direct more at Gust. Is from an entrepreneur level, the questions that are asked on Gust, on Proseeder, sometimes it seems like it's a little too much information. Okay. But if you don't put that information in, people don't look at you. Now, I want the people I'm syndicating with to be able to see me, but I've done some digging around in there, and I can get into just about anybody I want to see. So what do you do as Gust, or what do you see, or what are comments you're getting about the information that's out there? and maybe even old information that hasn't been updated?
Yeah, so it's very interesting. As far as, we'll start with the last question, old information that hasn't been updated. We're finding now that a lot of the VCs on our platform want to be able to help maintain these entrepreneur profiles so that they can use Gust more as portfolio management. So we're currently working on a feature now that will allow entrepreneurs to have one advisor, per se, who can get into their account and update information so they continue to spread the word and share that deal. As far as the amount of information that we ask entrepreneurs to provide in the system, it's a lot of information, and especially these companies that are just starting up, they don't necessarily have all the facts, but what the groups can do when they are asking for information to be filled out through that entrepreneur application is they can select what's actually applicable, what matters to this group right now. Maybe you only want to know the group's main problem. Maybe you only want to know what they think their competitive advantage is. You can select those as required, and then everything else can be left by the wayside. But there are a number of groups who do want more and more and more of that information filled out to see if they can do the necessary due diligence to vet the deals. Did I miss any of those?
No, there's a lot of questions, yeah. No, good. And again, going with Gust, just because I'm more familiar with it, what's your income model? It looks like you're moving into something else, but up to date, you haven't had what I understand is an income model.
Yeah, we're asked this a lot. What we have done in the past is we have charged investor groups to use the platform that were not affiliated with our federation partners. So if you were not a member of the ACA or NACO in North America, we would charge you $1,000 to $5,000 per year to use that platform. Now, as we're rolling out Gust Equity Management, we have changed our model considerably. So investor groups are no longer having to pay to use the platform, no matter what size of investor group you are. And we are charging our entrepreneurs for the prepare packages, for the 409As, for the cap table management. As well, I don't know if you're familiar with our eco hubs, digital.nyc, tech.london, starthub.boston, and those are public-private partnerships where IBM, for the past couple of years, has been paying to keep the ball rolling and ultimately sponsor those eco hubs that we've created around the world.
So, Kate, my question for you is, I really appreciated Seth's presentation this morning. It was really interesting to me. Probably one of the things that was most interesting to me is it sounds like the average deal, when they led the deal, still is about $300,000. Peter, you need to correct me, but for a good RBC deal, it's about $300,000. What are you averaging now? About $300,000. So I thought that was really interesting that now you have a well-known group going out there as founder group, a lot of followers, and it was about equal to what kind of the mind share of the RBC does. Through Galvanize, you probably see a lot of these things because you guys are kind of more on the lead and followers. What size deal do you see, and how does that kind of reach out? Do you have serious followers that come in a lot, like Seth was saying, or please comment.
So at Galvanize, we haven't started using AngelList, but I'm definitely probably going to start implementing something on that because it's just too big, I think, at this point to ignore. Same thing with Gust. I think now, even as a VC fund, especially at the early stage, you need to be participating at this level. So Seth's talking about his, AngelList platform, their experience on the platform versus their structure where they invest in a deal just from founder group versus founders fund. I'm seeing different deals across the country because we're investing nationally. San Francisco is really expensive. It still remains, entrepreneurs at the early stage are coming out of accelerators, or they haven't gone into one yet, or they may just never go to one. At the seed level, I continue to see seed rounds priced at like 10 million pre, for not a lot of reasoning behind it. I've actually backed off of that market for a little bit just because I'm waiting for it to go down. But I know it's more expensive. New York is definitely up there too. They're probably at a seed round is around average 5. So if San Francisco hovers around 6, 8, 10, 5 being the low end, New York's definitely at 5. The wonderful thing about places like Colorado and Austin and Seattle is that a seed round is realistic in terms of pricing. It's either, cap note at around 3 to 5, and I think having a strong VC lead that can really dig in and determine that valuation versus just an entrepreneur putting a price tag on it because no one else stepped up. I'm seeing that a lot, is that no one wants to lead at the pre-seed level. So an entrepreneur will say they're valued at 5 with no product, no revenue, minimal technology built, maybe just an app, no, large platform, not necessarily that has to be everyone. And no one's stopping them or at least questioning the valuation. And so they get a group of angels coming in, oftentimes friends and family, that just say, sure. And then they get crushed later on because some VC is like, no, you're not worth 7 now, a year later. So in terms of pricing, the initial lead still fluctuates from, I'd say, around 250 to more, depending, my old fund leads deals at around 500,000 to $1 million initially, and they like to get in at 3.5 to 5. But they have a huge reputation, so they can do that and dictate terms.
So going off that valuations, you probably know a lot about valuations, have a lot of valuations in your database. And my assumption is you're collecting that on Gust. Is there a way for the investor or the entrepreneur to get some, state of the union on what the average is right now from Gust?
Yeah, so in a partnership that we have with Forbes, we release this information quarterly. And if you ever want to dig a little bit deeper, you can just reach out to me and I can always pull that information for you. We're working to build this out in the most robust way possible so that we can aggregate all this information and it can provide you with more statistics. And we're constantly using the same sources over and over and over to understand this angel market, but it's impossible because we're all relying on you guys to give us that information up front, right? Because that's the only way that we can get this data. But feel free to reach out to me and look for our infographics every quarter in Forbes as well, or through our blog if you have that information.
Okay, I'll start with you. What do you think are some of the biggest challenges in syndication for small entrepreneurs right now?
It's hard, right? It's always hard. Finding people that believe in you, believe in your product. If you're a repeat entrepreneur, it's sometimes easier. It's the same thing at the seed level too as a VC. I spend a lot of my time, if we come into a deal earlier where there's not, we're betting on it before the whole round is spoken for, I spend a lot of my time syndicating with other VCs that are looking for similar things, our current LP base that I know wants to follow along when we do something. It's, for an entrepreneur to find the right people, I can't speak enough about a Gust or an AngelList. It's, especially if you're in a smaller market and you're not pounding the pavement in an area like San Francisco or New York City, it's a great way to reach a ton of people. If you can get a syndicate lead to back you on something like AngelList, and they have over 3,000 or however many million followers, that's a ton of eyeballs that you can't do as an individual just taking meetings. So finding ways to just be the one-to-many, and you only have a couple, this is sort of an unfair statement, but you only have a couple of months, right, to go out and raise your pre-seed round, your angel round, your seed round, even your A round, before you've been out in the market a little too long and people think there's something wrong, and this is not a fair way to evaluate a company. It's just the reality of people saying, oh yeah, have you seen that deal XYZ? Yeah, I saw it a couple months ago. Oh, they must not be raising. I don't understand. No one must like it. That's not fair. And so finding things like Gust or an AngelList where you can project a strong image of your company, a strong syndication, do anything like that to really give yourself the best foot forward.
So Tina, you're from New York, but you say you go to all the angel capital meetings, so you're seeing a lot of angel groups, plus with your job with Gust, all over the world. Where do you see the most syndication happening, and where do you see the least syndication happening?
I think now we see syndication everywhere. When I was in the Southwest, I was surprised at the way all those groups came together as well to syndicate deals. In New York, it's happening all over the Northeast. The Southeast blew my mind. I was at a conference in Chattanooga, the Angel Summit in Chattanooga, and the amount that the groups down in the South were collaborating, I found very, very exciting. To go kind of back to this question about entrepreneurs and how to find groups that will syndicate together to find your deal. Something that you may have noticed lately on Gust is you have the opportunity, it'll say something like deals that are syndicating on Gust now. Like, what does that mean? Where are those deals coming from? If you haven't clicked the button, then you're probably not aware of our partnership with Seed Invest, which I think is also applicable to this conversation. So what we do is Seed Invest works two ways. On our end, if we see an entrepreneur that has 30% of their deal committed to, and we think that deal will be relevant for the individual accredited investors on Seed Invest, we pull the two together for a conversation so that entrepreneur can more quickly close out the round by moving to Seed Invest and having those individual investors kind of piggyback off of the more experienced angel groups on our system. Additionally, we move the other way. So the deals that you're seeing that are syndicating on Gust now have brought incredible traction through Seed Invest, and we're just trying to open those up to the individual investors on our platform that are most likely affiliated with groups, but maybe they don't want to have to rely on that group all the time, and they want exposure to some other deals that are coming their way. And that's also a great opportunity to kind of hop in and get involved in ways that aren't necessarily within your angel networks.
Good. I want to give you both, before I open up for some questions, any other comments that you'd like to make before I ask for questions?
I think I will say that when I pulled up some of the statistics on syndication on Gust on Friday and then through the weekend, I was really surprised to see that France was beating the United States as far as syndication is concerned. France is not only syndicating within the country, they're syndicating with U.S. groups as well, but the outreach has always been from France to the USA. I think we had 37 startups funded through syndication on the Gust platform in France in 2015. And if you look in the United States, we only have 8. So I think there's a lot of room to grow. All you have to do is click that co-invest button, and then people will automatically have access to these deal rooms, so you can start the discussion from there.
Well, that, to me, I'm taking a mental note to update my Gust platform and hit syndicate, 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 right? Okay, so we've got a few more minutes left. I wanted to open up for questions for the audience. We've got one down here in front.
In line with that last comment, Tina, have you seen any syndication from Mexico?
You know, I will say that our reach is extremely global, but our presence in Mexico has been lacking. We just inked a partnership a couple of weeks ago with the Mexican government, though, so we're going to be looking to bring in a lot of partners in the near term, so we're excited about that.
Okay, questions? Oh, Rahul.
Question for Tina on Gust. You have hundreds of companies. Have you had a chance to kind of compile the data on the successful companies? And if you did, what are the successful criteria or whatever you have? Thanks.
Yeah, success, if you define success as getting funded on the Gust platform, it mirrors real life, so it's about 2%. 2% of the 350,000 entrepreneurs that are on our platform have gotten funded. We're looking to always increase that. I mean, the main mission of Gust is to get entrepreneurs funded. Whatever we have to do to help empower that entrepreneur to get to the level where they're ready to pitch to the angel groups and the VCs. We've taken that very seriously, and if you're an entrepreneur and you sign on to the platform now, you'll see within your workspace there are a number of tools that you can use that'll help you get up to speed and get ready. We want to make sure that that individual entrepreneur who maybe just has a brilliant idea and his laptop and is sitting in his dorm room has a couple of tools that will help him really strengthen his message and strengthen his confidence in his company so that he can go out there and he can hopefully increase that number from 2% to beyond.
Good. Okay, up in the back, right in the middle. Yep.
Have a microphone.
Oh, I'm sorry.
going to ask a question.
No.
As an entrepreneur, I find that there are too many platforms for me to go on to now, between AngelList, Crunchbase, Circle Up, Gust, F6S. You know, there's so many of them, and then trying to keep that data updated across all those platforms is also a pain when we're just trying to find the right people at the right time. Any recommendations for us as to where we should focus?
I think in terms of if this is your first round going out, AngelList is really focusing on their syndicate leads going forward. That's their energy. So if you can build a relationship with someone who has a syndicate lead, that really focuses on the right time that you want to be raising. Because again, you don't want to. You can always just have a profile there and it's sort of dormant, but the minute that someone's backing you as a syndicate lead, it's like this clock starts ticking. So I think that's the strategy that has worked for a lot of entrepreneurs on that particular platform. But I agree with you that it can kind of be a full-time job making sure that your data across everything is correct, but depends on what type of area you're focused on, and I would go find the right investor groups or the right VC funds or advisors that are specifically focused on, say if it's healthcare, even accelerator programs, and focus your energies there versus trying to do, everyone who will listen.
I, of course, have to tell you that Gust would be the best place to keep your information up to date. And I think, as I mentioned, the VCs are starting to get involved and take charge of the entrepreneurs' profiles as well. So as we continue to grow out this ecosystem, I really think that it should be your first stop and then hopefully your last stop on the way as well.
Okay. The one with the microphone.
Yeah, I'm an entrepreneur, and we heard from Seth that we can't assume AngelList, and I think for that matter Gust, is a marketing platform, that it's not, and that we need to have our investors come and participate through AngelList and Gust to then raise money. But I'm not so sure with how the syndication process actually works when you have an angel group that is sponsoring and being active with us. Maybe they're not working on a syndication process yet, so just if you can clarify exactly what is that process, working through syndication on your platform.
I think for us, most of the angel groups on our platform do co-invest and they do syndicate with other groups, and they know which groups they trust enough to move forward with and bring deals to. I think if the angel group, and I'm not an angel investor, so I probably shouldn't be speaking for them, but I believe if they have enough faith in your deal and they want to make sure they can close out that round, and they have other investors, whether they mention it to that investor at a dinner, at an event, on the golf course, whatever it may be, they'll bring them in and let them know. But I can't be sure of that.
Can you just clarify one more point? And so if there's a term sheet that we have for agreed with, and how does that then go to share with the other angel groups when you're going online and doing all this interaction?
So if you have a term sheet from either an angel investor or an angel group, say today, I would go with that option. That sounds great. It's present, it's now. You don't have to go and try to find another competing term sheet if you like that. If I was working for AngelList, I'm sure they would say, the syndicate lead is what they're trying to qualify as a term sheet. So it would be almost doubling down, unless maybe there's someone in your angel group who's close with Jason Calcanis and he wants to lead it, talk about the same terms and then project that out. I wouldn't try to do many things at the same time. Just pick the best group that's representing you and that's going to stick with you over the course of your, investing process for years. If AngelList it feels a little after the fact for you because you're already receiving funding, go with that. You don't have to do everything.
Okay, what do we got? Maybe one more question? Going once? Going twice? Any more questions between you two?
I'll just make a statement. If anyone wants to get in touch with AngelList, I can put you in touch with my friend Adam Carver in terms of the angel lead that I was talking about and trying to receive funding from the C Upstart program. I can put you in touch with them.
Good. Okay. One more. Where do we see it? Yeah, right here.
So, it's great that there's a majority female on this panel. I really appreciate that.
I'm sensitive.
AngelList and Gust and in general, the companies and startups that are being funded through syndication?
In terms of diversity?
Yes.
I don't have AngelList numbers on top of my head, but I did peruse over the weekend, and I know Barbara Corcoran from Shark Tank, her syndication is like, you know, on the front page. But if you click down into like the numbers of the rate of return, the amount of people who follow it, the amount of money that's in her, and I'm not having her speak for all of, you know, the female syndicates there, but it's okay, you know, comparatively to the, I mean, there's a ton of men versus women on that in terms of like the syndicate leads. But just a small aside, a friend of mine who works at Union Square Ventures is leaving, and her choice of next career is to lead a syndicate on AngelList, which I thought was really interesting in terms of just that seems to be an equalizing platform that she's decided that will give her a leg up. I think the stats are probably still the same in terms of, you know, women versus male-based companies that are there, but again, it's a low barrier to entry, so I think it does favor diversity if you can, you know, use it the right way.
Great. Well, please give Kate and Tina a big round of applause.